I'm Jim Schultz. Welcome to the afternoon edition of Options Uncapped, the back half of the double feature, man. I'm glad you guys are back. We did it this morning. We're doing it again right now for the afternoon Monday edition of what it is that we're trying to do. So thank you guys so much for being here and being a part of the program. Don't forget, guys, this is very, very simple. Very simple. You have one job. You have one singular task: to get into the YouTube chat and pump that algo. If you are watching this show anywhere other than right here, then you're doing it wrong, man. You got to be right here in the YouTube chat for PTA. Let's juice those robots like they have never been juiced before. So welcome to the afternoon edition of the program. And so this edition of the show, or this show, I guess it's kind of a standalone entity. So this show is indeed sponsored by Ghost. Now, I don't think they know they're sponsoring the show, but this show is sponsored by Ghost. So, like, midway through the day, like, I'm getting used to my, like, my new schedule and my new whatever. You got the morning stream, got the afternoon stream. And then, like, in between, I'm, like, answering emails. I'm working with Grace and Ryan on different things we're working on. I'm recording videos. I'm editing videos and doing things like that. And obviously getting ready for the, the second stream. And I'm even trading a little bit, too, around the edges. And so, normally, my typical workflow used to be, from theory to practice was 2:30 to 3:15, and then I would queue up a Ghost for like 3:30, 4 o'clock. But now that my workload has increased significantly from the FTTP days, I'm like, man, we may start calling on these Ghost reserves a little earlier. And so today, we're going to have a little original. And so original, in my opinion, it's not as good as Sour Pink Lemonade. It's probably... Oh, did you guys hear that? Oh, man, it's beautiful. It's probably not as good as Sour Green Apple, but it is quite good. It is quite good indeed. And if you've never had one, and you're like, man, I wonder what that tastes like, I'll tell you exactly what that tastes like. That tastes like... It tastes like happiness mixed with childhood memories. Like, if you combine joy and nostalgia together, that's exactly what the original Ghost tastes like. And so we've got our Ghost ready. The Banana Nannies will come after the show. You may have pulled the trigger on those guys early during the show, which of course would be a very, very strong move. But yeah, so we're getting going. Here we go. Ryan, bring us into the market. Let's take a look at what's going on, man. What is going on in here? Yeah, so a couple of things have changed since the morning. It's kind of fun having the morning stream and then the afternoon deal. So you can see EME S&P is down 22. You've got the risk-free instrument, also known as the NASDAQ futures, down 240. You got the boomers up 57. You got the Russell 3000 dipping under 3000, down 23. You got bonds up. You got notes up. You got oil down. UB40 is up. The shifties are celebrating, not quite like they were this morning, but they're still up a little bit. I'm sure the Hunt brothers are doing okay as well. And never forget, guys, this is all for education only. This is all educational. It's a wee little bit of entertainment. It is not financial advice. It is not a trade recommendation. You need to talk to a professional, and I can assure you it is not me. You need to talk to someone that knows what they're doing, and I can assure you it is not me. And so, as we move forward through the forest, let's all keep that in mind. So we did a couple of things in between, the morning session and the afternoon session. So you saw this morning we did the Apple Strangle, and then we did the MES. EQT. Well, we got the MES EQT back, which was super nice. And so I'll show you guys what happened here. So we got the MES EQT back. It was just a couple hours ago at 11:46. I mean, nothing super crazy there. And then I decided I don't do this too often, but I was kind of taking a peek at the market, and it had rallied back up a little bit. So I'm like, okay, I'll see if I can dip my grubby little paws back into the cookie jar one more time and just see if I can't come away with something other than an oatmeal raisin. Like anything other than an oatmeal raisin, right? I'll take a chocolate chip. I'll take that chocolate coconut that we talked about this morning. I'll take a peanut butter, obviously. I'll take a snickerdoodle. I'll take, what else might I take? I might take a little graham cracker deal. As long as I don't get an oatmeal raisin, then everybody's happy. Well, thankfully, I didn't get that oatmeal raisin. And you can see we got that guy back pretty quickly. Now, that's not typically the usual equilibrium window that I might be looking to trade. But again, it's very free-flowing in nature, not unlike your boy's lettuce. And so when I think about what I'm trying to accomplish, I don't know what I'm trying to accomplish with the lettuce, just so we're clear. But yeah, we got the MES back, and then we did an MNQ trade a little bit here before the show. And so if I go to, let me bring up, let's see here. I'm going to bring up the active trader because this is cool when it works. Sometimes it doesn't show you the executions like I would like it to show the executions, but when it does, it's really a really nice little feature. So this is the trade we did this morning. All right, we bought this MES, and then we took a little bit of heat down there. Let me grab, oh man. I saw you scramble everything earlier this morning in the chat talking about some diet strawberry. It's back, baby. It is back. Take a look at this. So we bought this guy down there, right? We got our diet strawberry. I mean, look at that color on the screen. Is that anything other than diet strawberry? The only answer is no. That is diet strawberry. It's not strawberry. It's not pink. It's not fuchsia. It's diet strawberry. So we bought our MES down here. And then you can see we took a little bit of heat. I mean, you guys saw a lot of the heat being taken on the show. I mean, most of it was live on the show during the morning stream. If you missed this morning stream, then go back and give that guy a look. It's right there in the archives. And then it just kind of chopped around and did whatever. And then, we were able to get that guy off, as you saw a couple of hours ago. And we got our 10 points out of MES. So that was really, really nice, of course. And then I saw the market was kind of strong. And I don't know, was Besant talking today? I'm not even sure if it's Besant or Besant. I don't think it's Besant. Right? Has he got a little French in his name? No, I think it's Besant. And so, because I usually read his name, I don't hear his name. And so I'm pretty sure it's not Besant. And so, if it's Besant, that would be a power move. But I think Besant was supposed to talk today, but I don't know. Anyway, it's all made up. And so we got our MES back, and then we did the MNQ trade. So a couple of things I want to talk about, because there's some questions from the morning. A couple of people were asking about EQTs, and again, I know this is new, it's novel, and so we're going to keep kind of going over the same things for many, many days and many, many weeks, of course, because that's what we do. I mean, that's kind of just the way that we do things. And so I do want to take a couple of extra seconds here, and let's talk about EQTs a little bit more. And actually, if you go back and check the tapes from this morning, which we're going to do, it was actually a pretty ripe environment for some EQTs. So if I go ahead, like if I bring up the NASDAQ, I want to get off of active trade. Let me go back to like a normal chart, because there's not really much going on in the market. I mean, we already have, I'll get back to the EQT, but in terms of like my portfolio right now, just to kind of, because again, giving you guys a chance to watch the book being built, watch the book being traded. Like, I think that's pretty cool. Like, I think we're actually taking what we did on From Theory to Practice, and we're going to another level. Like, I actually feel like we're able to do some things we weren't able to do back then, which is pretty awesome. And so just looking at my positions, though, across the board, I still have my short put on an MES. There's nothing to do there. It's out of the money. We're feeling good. Like, everything is set up and squared away. MNQ, we have nothing on now. We got a couple of EQTs, which is obviously really, really nice. So that's good. Apple, we just put that guy on. We sit tight. We're already up. Man, we're already up a full BEU on that trade. We are already up one full BEU. And if you are brand new to the show, one BEU is equal to a bonefish equivalent unit. Shout out to Danny Perkins, who came up with this term. This is not my term. I mean, I'm using it from this point forward with no credit or royalties being paid back to Danny, other than the verbal credit that I just gave him. But the BEU, when we're trading, guys, when we're in the markets, we're doing our things. We got winners, we got losers, we got whatever. Sometimes it's hard to make it real. Sometimes it's hard to make it tangible, right? And so it's really helpful sometimes to just step back and kind of detach from the situation, Jocko Willink style, and say, man, what is going on around me? What is actually happening around me? How do I make these dollars make sense? How do I make these dollars make sense? The BEU will do that for you today, sir or madam. Because one BEU, so if I grab, let's go back. Can we grab like the OU Blue? It's kind of the Glacier Freeze, the artist formerly known as Glacier Freeze. One BEU is equal to 25 US dollars. And so when you're thinking about, hey, I just made $80 today, that's 3 BEUs. Like, that's going to get you to Bonefish 3 times. And again, no one's going with you. You're going to be by yourself. That's going to pay for the whole meal, right? And so that's really nice to make this stuff real and make this stuff kind of tangible. And so that is what a BEU is. And Apple, we're already up a BEU, but I'm going to sit there. We're going to go for more than just one BEU there on that guy. And then GLD, we sit tight. Again, gold has cooled off, which is super nice. That helps the cause, of course. And then IBM, this is it. It's big blue. Like, we sit tight, we do nothing. It's getting hit a little bit today, but that's totally fine. So let's talk a little bit more about EQTs for a couple of seconds, and then I'll probably just go right to questions around the halfway mark of the show or thereabouts. Oh, I see Grace in the chat. I see Ryan in the chat. Yes, guys, if you haven't done so already, subscribe to the channel. That would help a ton. Like the stream. That would help a ton. Hey, share the link to the stream, like out on your Twitter, like right now. Like say it's live, it's happening right now, you cannot miss this. And then they're going to come over and be like, well, I probably could have missed that. But they're there anyway, so we get the click, we get a little bit of that watch time. And then, of course, hop down into the description. You can sign up for the Trading Lab, totally free. It's me just basically sending out my ideas and my insights that I've discovered in building OU over the last 4 to 5 years. And so it'll be express delivered straight to your spam folder. And what could be better? And so, all right, so yeah, a couple of announcements there, I suppose. So let's talk about EQT. So the basic idea behind an EQT, I am simply trying to take advantage of the search for equilibrium in the marketplace. There's math, there's quant, there's kind of my own, like, I don't even want to call them theories because they're not really real. I mean, they're very real in my mind, but they're not like, you're not going to find them like an academic journal. You're not going to find them anything like that. I mean, some of the formal, like the OU resources I've created and I'm continuing to build, like it's all laid out in there in more detail. But I didn't want to like lead you guys to believe that there was like some, some 19 or some 1700s, Italian mathematical theory that's like, all right, they came up with Fibonacci and then they came up with this other thing and I'm talking about the other thing. Like, no, I'm not talking about that at all. These are all kind of my interpretations of different mathematical theories that do exist to kind of combine them and kind of coalesce them together in a way where I'm like, I think we might have something somewhat unique. I think we might have something somewhat novel. And so one of those things is this idea that during certain times of the market, which is not a super rigid thing. If anything, it's really for me to just put bumper lanes around what I'm trying to do and what I'm trying to accomplish. I mean, there are many days where I feel like EQTs are ripe for the entire day. It's essentially when the markets are really active and there's a lot of movement back and forth. And so obviously the open window is going to be really, really ripe for that because the open window is when you've got all the overnight, risk repricing comes out of the woodwork and all the buyers and sellers show up. All the PMs, the portfolio managers show up. And so everybody shows up, right? And so that can be really helpful from a wanting to take advantage of the activity standpoint. While there is this heightened search for equilibrium, I want to try to take advantage of that by essentially fading short-term moves in the market. Now, I don't know what's going to happen. This is not a holy grail. This is not a foolproof system. I mean, we've seen a handful of winners to this point, which is really, really cool, obviously. I'm glad it started this way as opposed to starting the other way. And so, but trust me, if you watch long enough, if you hang with me long enough, there will be plenty of times when you're going to be like, something burning? You're going to be like, did somebody leave the oven on? And then you're like, oh, wait, no, that's Dr. Jim, right? That's going to happen. Don't worry. I promise you it's coming. Like, I can assure you that is 100% coming. But it's just me wanting to take advantage of the back and forth nature of the markets and the search for equilibrium. That's what an equilibrium trade is. And so generally speaking, when the market opens, I want to see the NASDAQ move off of the opening price by usually at least 20 to 40 points, if not more than that. And then I might be interested in taking the other side of that. For MES, I want to see MES move off the opening bell by, 8, 10, 12, 15 points maybe. And then I might want to take the other side of that. That's the basic idea behind an EQT. And again, I'll continue to drop more breadcrumbs along the trail as we move forward and as it kind of makes sense to do that. But if I go back to MNQ here, let me see. And man, you guys have so many questions. Wow. Man, this is awesome. Awesome. The markets are fairly slow right now, so I'll probably go to questions here in just a couple of minutes. So if you have questions, please drop them in right now. I see Bullets was asking about equilibrium EQTs, which I wanted to explain right there. And some other people were asking about EQTs. And so hopefully that helps a little bit. But let me mention one more thing about EQTs. Then there actually is one point that I did want to make today. That's not really about the EQT specifically. It's about the EQT more as like a philosophy and like how I think about my whole portfolio now moving forward into the new dawn and the new day that is OU. So if I go back, just if you look at like the market open from this morning, if I just kind of circle, like if you just look at like here, you can see there's probably a better way to do this. I don't know what it is. But, you see the 930 print is right around, basically right around there, right? So the market opened right around there, and then, it obviously moved off a little bit, and then you had like right there. So if you actually look at this, and again, I don't have any indicators. I don't have any technical things. Again, if you want to use volume profiles, if you want to use depth of market, if you use all that stuff, I think it could potentially be worthwhile. I'm not convinced there's anything there, but that doesn't mean I'm the arbiter of truth and I have all the answers, because I do not. And so if you have really great volume profile things that you use, hey, shill me them. Shill them to me, man. I want to hear them. Like, tell me all about them. Tell me about your depth of market strategies, because I want to get better. I want to grow too. I'm not using those things now, but that doesn't mean I won't use them in the future. You know, shill me your favorite GEX level, your favorite DEX level. Like, I'm ready, man. Like, do it. But if we just look at what happened in the opening window, you can see that there was some back and forth to start the market, and then it moved off of that point, and then there was some more back and forth going into that 10 o'clock window. This is honestly exactly what I would want in a market opening window. Now, they all don't go like this, of course. A lot of times there's rocket ships up, there's rocket ships down. If rocket ships can go down, I guess they can go down. They're typically going up, but sometimes they go down. I mean, Ryan Grace, I still haven't finished it, by the way. He went all the way to, Tau Ceti, right? Is he coming back? I don't know. I got like 30 minutes left, so don't you dare ruin it for me, because if you do, Grace and Ryan both have instructions to block you from the channel forever. So I don't know if he gets back. Like, I'm not even sure if Rocky's still alive. Like, we're at that point in the movie where Rocky, like, got out of his little bubble and he saved him. And now it looks like Rocky's just taking a really long nap. But that's a little dicey, man. Like, he may not come back. So I don't know yet. So don't ruin it for me. But generally speaking, around the market open, this is what I want to see. I want to see opportunities of back and forth. I want to see opportunities of, to be able to fade the short-term moves and maybe pick up a few shekels before the steamroller gets us. And so you can see, even with the first circle up here, let me go back to, let's go back to the Diet Strawberry, just because we can. Like, if you look at this one, you can see you took a little bit of heat, right, going down here. But then, it came right back to roost right there. It came right back to roost right there. And so this is essentially what I'm trying to take advantage of. And it might look crazy. It might look like I'm just slanging from my hip, because at the surface, that I suppose is what I'm doing. But underneath the surface, I would like to think at least there's a lot of math and quant that's governing the process. And I'll get more into that as the days and weeks and months and even years kind of roll on. And so, yeah, so hopefully that makes a little bit of sense. But the other thing I wanted to say, which was kind of the core thing that I wanted to get to today, which is good. We're 17 minutes in, so we're mid-season form. Yeah, I really figured we'd knock this thing out within the first 90 seconds. Yeah, we're about halfway done with the show. And so that's, so that's pretty good. Let's go back to the positions tab. So when I think about, so let me just, we've got our 3 buckets, right? I talked about these this morning. I talked about these last week, the premium, futures, and the rover. I'm not going to talk about that now. We're going to go in a slightly different direction with these 3 buckets. But if I think about, like, if you think about a portfolio, just like a total portfolio, man, it's so good. It's so good. Like, for real. Like, it almost has like it's almost like a grape, like black licorice flavor to it. Like, if anybody has ever had the original Ghost, right? Somebody back me up. How would you describe this flavor to other people? Like, we know it's joy, we know it's satisfaction, we know it's all those things, but how would you actually describe it from like a flavor standpoint? I'm going to say it kind of has like a grape, cherry, black licorice flavor to it. It kind of tastes like, yeah, I don't know. I think black licorice might be the closest flavor that I can possibly hit, but help me out in the chat. If you guys have had this before, I would love to know. And I see it looks like Grace is trolling me on the black licorice. Yeah, she just doesn't know. She doesn't understand, right? It's okay. I mean, we'll bring her along. We'll bring her up to speed. She's 4 days in. Like, she's still kind of in, like, her kind of trial period, right? And so we got to see how things go. Like, I don't know if it's going to be a full-time deal. I mean, we got the intern waiting in the wings, right? We got my intern, my trading assistant, my 6-year-old daughter, Amelia May. She can step right in and pick up, like, right where Grace left off. Like, if that's where it's got to go, that's where it's got to go. But if I think about my 3 buckets here, see you guys troll me at the end of the thing saying NyQuil. No, it doesn't taste like NyQuil, dude. Dude, it's so good. Well, NyQuil is actually really good. So, so this may kind of clue you guys into my own personal flavor profile. In my palate, NyQuil is delicious. So can we all just make sure that we're on the same page here? Like, if you're not feeling well, and you're trying to get some sleep, and you don't feel well, so it's obviously a gotcha, right? You're like, I'm living this gotcha all day long. This really stinks. But then you get to the end of the day, the end of the night, whatever, you're about to go to sleep. There's a huge gimme that's waiting for you, right? That 1.5 ounce shot of NyQuil, Oh man, it's so delicious, right? And it's got to be the green stuff. The other stuff is fine too, but the green stuff, the green NyQuil, oh my gosh, man, it's just like, it's refreshing. And it just knocks you out cold within like 45 seconds. And so it's amazing. But anyway, I digress. So let's go ahead and I'm digging these twice a day deals. So when I think about a portfolio, let's get back to business. When I think about a portfolio, you've got your long-term stuff, you've got your active stuff, and then you've got, for my purposes, my EQTs, which obviously EQTs are very active, but I'll describe what I mean by this in a second. So most traders out there, most people, I mean, the 200 and some people watching the stream right now, you guys have these first two buckets. Like you guys have, your long-term holdings and your active holdings. Like this is, where a lot of active traders, premium sellers are going to live. They're going to live with the long term. They're going to live with the active. And this is where you primarily kind of, utilize most of your capital, right? It could be 50-50. It could be 65-35. You can split it up a number of different ways. But a lot of traders are going to live in these two buckets. Well, if we think about how these portions of your portfolio are situated. So the long-term holdings, let me just grab, we'll go back to, let's just go to yellow. That's fine. So if we look at our long-term holdings, right, these are primarily going to be positive delta. So these are going to be positive delta. You're long in the market. You're long AMD, right? You're long, Butterfly. Remember Butterfly? Remember we found Butterfly right at the tail end of FTTP there? We may have to do a little Butterfly at some point soon here. But you're positive delta, right? So the market goes up, you make money. The market goes down, you lose money. If history is any indication as to where the market's going, I don't know what's going to happen. But I do think some historical average of around 7, 8, 10, 12, 4% moving forward and definitely into the future is probably a reasonable expectation. Okay, that's fine. Now you've got your active portfolio, which this is primarily your options, right? These are primarily going to be your options. So now what are you doing? You're trading things like volatility, right? You're trading things like time. Right, you're adding a whole new strategic element to it. So you essentially have a layer that's put onto your portfolio that is completely different from the previous layer, right? So this first layer, this base layer, that's going to be long delta. That's going to be more passive in nature. That's going to be you're just collecting your dividends, you're reinvesting your dividends, whatever. I think it's great. I mean, I've got the same thing. You guys have the same thing. Most people have these things, right? And so that makes a lot of sense. Okay, great. The second layer that we've essentially added on top of that is this options component that looks very different from the previous layer. And I think that from a diversification standpoint, that's why I love premium so much. And that's why I love all the things we can do with options and derivatives. And it just really opens us up to many, many, many different options, pun intended. Okay, the third layer, and this is what really got me excited about OU and all the different things. I mean, EQTs are just one part of the puzzle, but it's a fairly significant part. Thinking about these EQTs, in my opinion, they are different from the previous two layers. And so, which is hard to find, right? It's difficult to find things that are going to be uncorrelated or, if you want to impress your friends, you could say they're orthogonal to the previous two components or the previous two layers, as I'm calling them. So these EQTs, because they're extremely short-term in nature, right? Your smash and grab strategy. A lot of times they're short, at least mine are. Yours can be whatever they, can be. Again, I can't tell you what to do. I would never even begin to try to tell you what to do. So they're very short-term in nature. They can be playing from the short side. And they, is there a third? I don't even know that there's a third thing. I think these are the two main things. I mean, well, you actually have the dynamic nature of the stop losses, which we kind of got into a little bit last week, but we'll touch on that some more as time goes on. But you have the short-term, extremely short-term nature, so oftentimes only minutes. A lot of times I'm on the short side. So right away, like let me stop here for one extra second. Right away, being on the short side, that's really nice because I'm not necessarily... Now, this morning I did double dip George Costanza style on the long side with the MES trade, but it worked out okay. And again, it all comes back to sizing. It all comes back to portfolio delta. It all funnels back to portfolio delta. Forever and always the end. And that's why I keep coming back to that number. But being on the short side a lot of the time, this is going to give me a layer of diversification that I don't really have with other things. Because again, you can be short with your options, right? You can be short with your options, but a lot of times what happens when you sell calls, right? Like actually, Ryan, take me to the soapbox here for 2 seconds. And then we'll leave all that on the screen. I'll come back. But I know that there's mostly options traders that are watching this. If you're not an options trader and you're watching this, man, I appreciate you being here. I appreciate you very, very much. But you're probably in the wrong spot. But I hope you stick around anyway because your boy needs that click-through rate. If you are an options trader and you want to create negative delta, right? What is one of the primary ways that you're going to do that? You're going to do that with short calls or short call spreads, right? Now, it could be a skewed strangle or something like that, but it's going to be a short call or a short call spread that's going to generate that negative delta. Okay, what happens if the market goes down? So you get the exact move that you want, or not that you want, maybe a lot of the rest of your portfolio is long, but you get the exact move that you prepared for, right? What happens? What happens almost every single time? You don't get paid. You don't get paid on that short call. You don't get paid on that short call spread, right? Why don't you get paid? Because volatility is expanding. Why don't you get paid? Because you got the delta move right, but the Vega move is washing away the delta impacts. It's washing away the negative delta that you put in place in the first place. And so that is one of the reasons why the EQTs were developed. Because I was like, man, now I can lay into these, or layer into, whatever you want to do. I can set up these short delta trades where I'm not succumbed to expanding volatility. I don't have the negative Vega that I would have with a short call, or I would have with a short call spread. Now, it's been said before, and I cannot for the life of me figure out who said it, but it's a catchy little jingle. For every gimme, there's a gotcha. So again, you sell calls, you sell call spreads. Yeah, the Delta Vega situation is a pretty big gotcha, but the nice gimme is you're typically out of the money. You've got room to be wrong. You've got probabilities, blah, 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 blah. Okay, what about the EQTs? Well, there's a plenty of gotchas there too. Because yeah, if it works out, it's great. It's, nobody gets hurt. I pick up my couple of shekels, I go home, and then that's that. But if it doesn't work, now I'm feeling the full weight of the wrongness of the move from the jump. And so again, don't let me fool you. This is not a foolproof system. This is no holy grail. But I like the way it kind of fits in with everything else. So Ryan, go ahead and bring us back. So if I think about these three layers to a portfolio, I'm just really excited. I'm really excited about the construction, the possibilities, again, the options, pun intended, of all the different ways that we can go. And so hopefully that makes a little bit of sense in terms of the orthogonal nature of EQTs and what I'm trying to kind of bring into the mix here with OU and with all these things. And so, all right, so let me go ahead and, man, look at these. Wow. Man, look at these questions. These questions are crazy awesome. And so, man, I really appreciate you guys so very much. All right, let's see. The afternoon questions from my man. I see you guys in the chat, too. Ordenius here. Ryan LP is here. Grumpy Mike is here. Man, Stockton is here. Mr. Flawless is here. N1C. Man, look at Sam L. Hold on. Sam L. Bonefish is definitely sponsoring the show without even knowing it. That's absolutely true. That's absolutely true. We should reach out to them here pretty soon. And so if anybody knows somebody who knows somebody who knows somebody who knows somebody who like used to work for somebody who lived down the street from a guy who drank Ghost, like let me know because I need the hookup so that we can maybe start getting some of them sponsorship dollars. That would be pretty sweet. So Dracos, my man Draco says, Dr. Jim, now that you and OU have your sea leg established, when can we expect the 2026 Shock the Natty Tour to hit the road and visit our neck of the woods? Yeah. I don't know, but I do have a sneaking suspicion that you may see some familiar faces on the road together in 2027. I will let you fill in the blank in terms of who that might be, but it could potentially be individuals that might rhyme with a Pony Babista, that might rhyme with a Bomb Noznov, that might rhyme with like, a Miz Tier King. Potentially, right? Potentially, like a Benny Bandrus. Like, I don't know. I'm just throwing stuff out there. I don't have any official statements I can make at this point in time, but it's possible because anything's possible. And so thank you there, Dracos. James Bond, what is going on there, my friend? James Bond says, thoughts on gold right now, GDX or GXJ? Well, I've already got my gold strangle on, so let me go ahead and let's delete all that. I've already got my GLD strangle on, so I'm probably not going to do too much in gold right now, especially since I would say there's a reasonable chance it happens this week. I mean, I do like trading the metals too for equilibrium trades, especially earlier in the morning. Like when they open up around 8:20, 8:30, the metals are usually pretty active. Excuse me, they're also pretty active in the evenings as well. And, NASDAQ rallying back up. Ah, man. Should we dip back in one more time? Nah, I think we'll leave it on the shelf for now. It's always that last trade that gets you. It's always that last one where you're like, ah, man, I just went in for one more, and they finally got me. But no, I'm going to leave it on the shelf for now because this is not really, I mean, the markets are fairly slow. They're not exactly whipping around. And so I'm going to leave it be. But from a gold standpoint, I've already got my strangle on. You know, MGC, I anticipate that I'll probably start having some directional biases in MGC here pretty soon. But as far as GDX and GDXJ are concerned, I mean, GDX has an IV rank of 66, which is really solid. Obviously, it's a $100 stock. So, I mean, if you went in here, you went into October with 53 days to go, not you personally, of course, I can't tell you what to do. But the royal you, the hypothetical you, if you were going to do something like selling a strangle, right? Sell a 16 delta strangle on both sides. I mean, that would be, that's only $1,000 buying power. I mean, look at that, man. Look at that buying power. Man, that is really, really nice from a buying power standpoint. And you've got a probability of profit of 76%. You have a P50 of 86%. And so all of that stuff is looking pretty good, looking pretty nice. You have a credit collector at 336, right? And I mean, one of the nicer things about this trade is the sizing of 1,000 is a fairly small position. This is a fairly small trade when it comes to position sizing. And so if you've got, trying to live between the 3 to 7% range, which is where we've lived, for most of our lives on the Tasty Network and where I've lived for most of my life on the Tasty Network. And I think it's a great reference point. I mean, if you've got $15,000 in your account, that's right around the 7% mark, 6.5% mark. And so that's very reasonable. If you've only got like $10,000 in your account, that's probably a little bit too big. But I really think the 3 to 7% range is a great range to live in when it comes to position sizing for undefined risk. Now, one thing to keep in mind, as capital grows, like even in a modest way from 30,000 to 50,000 like I have here, then you can all of a sudden start shrinking the position sizes even more while maintaining the economic significance, which I think is really, really nice. And so if I'm shrinking my position sizes while maintaining economic significance, think about the benefits that that's going to bring into my portfolio and the probabilities and the underlying mathematics. It's just going to be really nice because no one trade is going, let me restate that. I'm putting myself in a position to where the likelihood that one trade ends up becoming a real big stick in the mud that I just can't pull out for the life of me, I'm reducing that probability more and more and more. And that's what we want, right? And so one of the things when you have less capital, 10 grand, 8 grand, 12 grand, 15 grand, whatever, one of the concessions that you have to make, and it's just really the way that it goes, is your position sizes are generally going to be larger. Because yeah, you can do a dollar wide vertical if you want to, but there's nothing there, right? I mean, you could sell a dollar wide vertical if you want to and pick up 35 cents and risk 65 cents. But when you factor in commissions and you factor in fees and you factor in whatever, it's like at the end of the day, even if you're right, 65% of the time or 70% of the time, you're not going to make any money. You're not going to make any money because there's just no economic significance there. And so that's why I keep coming back to that over and over again because it's really important. But I think GDX would be a fine trade. GDXJ is probably similar. I think it's a little bit more, right? I think the stock price on GDXJ is like 140 or so. 132, yeah, 133. So it's gonna be a similar thing. The IV rank is similar, just a slightly bigger product, and so I think it'd be fine. Point B is in the house. What is going on there at Point B? Does OU have volunteer positions? Oh, thank you there, Point B. Not currently, but that doesn't mean not ever. That just means not currently. And so thank you so much there, Point B. I appreciate you, my friend. My friend. You are a friend of the family, and you have been here for a very, very long time. And so I feel like I've won the lottery here with Ryan and Grace running the show. I mean, I'm just here. I'm just eye candy, man. I'm just eye candy, right? And for the audio-only crowd, I'm just a sultry voice. That's all I am, right? Grace is running the show. Ryan's running the show, right? We're just here, just trying to do a little something while the show is on. Reach back out in a couple of months at a point B, after we go through our first, couple of, quarterly cycles. OU earnings call, I think, it's going to be in October. So I think the first OU earnings call is maybe October 12th or October 13th. I don't know. Ask Grace, because she's going to be the one that's speaking. I'm not going to speak at that. She's going to be the one that speaks at that. And so, yeah, so you guys will see it, though, on Earnings Whisper. And so just be on the lookout for that. The ticker symbol is BEU. And so, because we know it's available, right? You guys remember from Theory to Practice? It's out there. Look at that. Look at that. Right? So, if you ever log in and you type in BEU and something comes up, you'll know we went public. That's how you'll know. Like, we are now a publicly traded stock. We are a publicly traded company. And so we made it, Mom. BEU, that's going to be the ticker symbol. It's going to be amazing. Running Marvel's in the house. What's going on there, Running Marvel? How do you think about trading grains, corn, wheat, soybeans? And are your mechanics different for different futures and commodity exposure? It's a great question there, Running Marvel. To be honest with you, I haven't traded the ags or the grains, corn, wheat, soybeans, in quite some time. I mean, it's been years. And so I understand that they can be quite different, not only with like the sizing and the tick sizing and those kinds of things, but in terms of the seasonality of these products, I am so far removed from that, on the one hand, everything is the same. Everything is the same. It's all priced, to perfection. It's all priced based on volatility. It's all priced, all that kind of stuff. But on the other hand, I do feel like there is some not entirely insignificant benefit that can be had by understanding what it is that you're trading. And so I haven't traded those things in a long time, so I can't say if, the mechanics would apply there. I do think if you did something like sold the strangle in corn or sold the strangle in soybeans, I don't really have any reason to believe why it would be drastically different. But because I haven't traded those things in a long time, I can't really say with much confidence in either direction. If for anyone who has followed me for a while, and if you are brand new, a lot of new people are finding me, man, that's really exciting and really, really awesome. I hope that you stick around. And if I can ever help in any way, please reach out to me directly. I'll try to help in whatever way I possibly can. I want to find 5 or 6 or 7 things, and I want to hammer those things until the cows come home. I just want to keep pounding on those things over and over and over again, rather than trying to learn 20 or 30 or 40 different things and try to be above average at a bunch. I'd rather try to really master my craft and master our craft at a handful of things. And so that's another thing that I want OU to kind of rest on, one of the pillars of simplicity, in terms of, let's kind of get rid of all the noise. Let's get rid of all the stuff that's maybe it's good, maybe it's fine, but it's not really going to allow us to move forward towards what we're trying to accomplish. And so I'm trying to kind of, separate the wheat from the chaff for all my Matthew fans out there, and see if we can't make some sense of, 5 or 6 main things. And so hopefully that helps you there, Running Marvel. But let's see. SC Austin says, Dr. Jim, can you talk about IVs for the individual expiry and strikes? How do you use them? Yes, I actually will have a little bit more to say about this. I'll probably have a YouTube video coming out about this pretty soon with volatility skew. And so definitely be on the lookout for that. And I just posted a YouTube video about going naked in your IRA. Definitely give that guy a look. It's already on the YouTube channel. If you haven't watched that yet, it's a pretty interesting thing. If you didn't know that you could do this, you can trade naked options in your IRA. And I mean, it's not clickbait. It's legitimate. If you watch the video, you got to watch the whole thing, of course. But if you watch the video, I'll show you exactly how to do it in my own IRA. Now, I don't trade my IRA that much because there's not very much money in there. And so it's not really an active thing that I do, but I have done it before. And I did have the account available to show you guys, this is how you set it up. So give that guy a look. But as far as strike selection and individual IVs and such, we'll take a look at that at a later point there, SC Austin, hopefully in the somewhat near future. Let's see. Let me see. Mark Hutchins. Dr. Jim, do you ever look at unusual options activity for possible trade ideas? Never. I don't think there's anything there, but again, I'm not the arbiter of truth, but I never look at that. Let me see if I can find, let's see. Here we go. Ryan LP. Ryan LP says, what's the ideal delta for $100,000 of net lick? Okay, so this is a great question, and this will give us another opportunity to kind of run through an iteration of understanding leverage points. It's not quite as good now because it's not as cold as it was, but man, that is amazing. So if I'm looking at 100,000, right? So that would essentially be double what I have here, approximately. Again, the best way to think about this, in my opinion, is you take SPY. Where's SPY? Let me grab, hold on. Let's grab SPY. It's like 760 something? 770? Yeah, 764. It's fine. Doesn't matter. 760, let's just call it 760 just to make it easy. So 100 shares of SPY is equal to $76,000. So 76K is 100 shares of SPY. Okay, you have 100K. So that means your portfolio has approximately, again, I'm no Julia Spina, and we don't need a surgical level of precision, but you have approximately 130 shares of SPY in your portfolio. So what that means is, if you then take that and kind of compare that or convert that to beta weighted delta, we can remember that one share of SPY is equal to one beta weighted delta. Ooh, that's a pretty aggressive delta, but it is a delta nonetheless. And so one share of SPY is equal to one beta weighted delta. Okay. If I understand that, then that tells me that 130 shares of SPY is equal to 130 beta weighted delta. All right. That means, Ryan, this is a great question. That's not only hopefully going to help you, but many, many others that are also watching today. As you're trying to think about leverage points, you're trying to think about where you want to live and things like that. If I'm at 130 shares of SPY in my portfolio, that means if you look at your portfolio, so here, let me grab, let's go back to the OU blue. We can do it. So let's say you looked at your portfolio up here and you had 130. Positive or negative, doesn't matter. That just means you're long or you're short. We'll leave that out of the equation for the purposes of this illustration. If you look up there and you see 130, here's what that means. That means you have 1x leverage to the overall market. You have 1x leverage to the overall market. So essentially you have no leverage, right? You have the same exposure as if you were just fully invested into SPY. Right? And so that's what I mean when I say a leverage point. So when you say, what is the best delta, the ideal delta, I can't really answer that because it depends on how much leverage you want to carry. Some people say, yeah, I don't really want to have any leverage. I just want like kind of quote unquote full market exposure. Then somebody with 100K, you probably want about 130 delta, right? Long side, short side, you make that call. That's of course up to you. But then, if you had 100K and I had the equivalent of 130 shares of SPY in my portfolio, but you look up at your portfolio, you see 260. What does that mean? That means now I have 2x leverage. So now I have 2x exposure to the overall broad market index. And again, some traders will look at that and that's good. Some traders will look at that and say, all right, that's where I want to live. Some traders will look at that and say that's too much. Other traders will be like, man, don't even get me out of bed unless I'm at least 4x. Right? Again, I've seen it all across the board. I've lived it myself all across the board. Everybody has to kind of make this up, make up their own mind when it comes to where they want to live from a leverage point. I think just based on, talking with thousands and thousands and thousands of traders, emails, live events. I mean, I've connected with so many of you guys on the road. I mean, I've probably done 100, maybe 100 events or 100 cities with Tom over the years. I'm going to say most traders live between 1.5x and 4x. That's the range where I think most traders end up living. Most active options, premium selling traders, right? Again, people that want to be totally hands-off, passive, buy the market, go live your life. That's a different thing entirely, of course. I'm talking about our crowd, if you will. I'm going to say 1.5x to 4x. And so, that's where the ranges in OU were kind of informed from. It's from talking with all you guys. Everything I've tried to create is from you guys. It's literally from you guys, just listening to you guys for all the years in terms of what you do and what's important and what's not important and all those kinds of things. And so, all right, let me try to get to one more quick one if I can, because we're like almost out of time. Let's see. ECU. Oh, really quick. Source 1 says, can we short triangles in an IRA? Yes. Watch that video that I just talked about. You can do it with futures options. You can do it naked if you want to. ECU, were those futures options positions you have on, Jim? Right now, I have a short put in MES. That's a futures options position. And then the MNQ trades today and the MES trade, those were outright futures. And so that was a straight futures trade, this MES guy right here. And then the MNQ guy from last night, and then the MNQ guy from just before the show. Those were all just straight futures trades. And so, man, I think we made it. Did we make it to the end of the show? Man, I think we made it to the end of the show. Man, I appreciate you guys. I appreciate you guys so very much. If I can ever help you guys in any way, please shoot me an email. I am jim@optionsuncapped.com, or we can connect on Twitter, where you can find me at optionsuncapped or even at jschultzf3. And I will see you guys. No stream tomorrow morning. We're doing the stealth stream tomorrow morning, but I will see you guys tomorrow afternoon for the show. In the meantime, guys, trade them small, train them heavy, and stay generous. I'll see you guys tomorrow.